Defining the world's wealth is a complex endeavor. True wealth encompasses a multitude of assets, both tangible and intangible. From natural resources to human knowledge, the components of global wealth are diverse and interconnected. Measuring this wealth accurately requires a multifaceted approach, considering both physical value and financial instruments. The concept of wealth evolves with societal advancements and technological innovations. The rise of the digital economy has introduced intangible assets like data and intellectual property as significant contributors to global wealth. Cash, in its most recognizable forms, coins and banknotes, represents the tangible aspect of money. It serves as a medium of exchange, facilitating daily transactions. Governments issue currencies, controlling their supply to maintain stability. The value of cash derives from the collective trust in the issuing authority. Despite digital payment methods, cash remains vital, especially in developing nations. For many, cash transactions offer security and immediacy. However, cash is susceptible to theft, loss, and damage. Transporting and storing large sums of cash can be cumbersome and risky. Bank deposits represent a significant portion of the world's money supply. Depositors can access their funds electronically, make payments online, and earn interest. Deposit insurance schemes provide a safety net for account holders. Online and mobile banking have revolutionized financial interactions. Electronic fund transfers allow seamless movement of money. However, digital banking introduces new vulnerabilities. Cybersecurity threats pose significant risks to financial institutions. Data breaches can lead to financial losses and reputational damage. Banks and regulators work to enhance security measures against cyber threats. Securities, such as stocks and bonds, represent ownership in companies or loans to governments. Investors purchase securities expecting financial returns. Stock markets provide a platform for buying and selling securities. Investing in securities allows participation in economic growth and wealth accumulation. The stock market reflects investor confidence and economic health. However, it can also be influenced by irrational exuberance and speculative bubbles. Investing in securities involves inherent risks, and investors may lose money. It's crucial for investors to conduct thorough research and understand their risk tolerance. Cryptocurrencies, such as Bitcoin and Ethereum, have emerged as a digital alternative to traditional currencies. These decentralized digital currencies utilize cryptography for security. Transactions occur directly between users, eliminating intermediaries like banks. Proponents highlight their potential to democratize finance and reduce transaction costs. However, volatility and regulatory uncertainty pose challenges to widespread adoption. The value of cryptocurrencies is highly speculative and subject to extreme price swings. The decentralized nature presents challenges for regulators. Governments are grappling with how to regulate cryptocurrencies effectively. Despite challenges, cryptocurrencies have sparked innovation in financial technology. Blockchain technology has the potential to revolutionize various industries. Gross domestic product, or GDP, is a widely used metric to gauge economic performance. It represents the total value of all goods and services produced within a country. GDP includes consumer spending, business investment, government spending, and net exports. A rising GDP generally indicates economic growth and job creation. However, GDP alone doesn't provide a complete picture of well-being. It doesn't account for income inequality or environmental sustainability. Economists use GDP growth rates to assess economic health. A significant decline in GDP can indicate a recession. Alternative measures like the Human Development Index and Genuine Progress Indicator have emerged. These indices incorporate factors beyond economic output, providing a more comprehensive assessment of progress. The money supply refers to the total amount of money in circulation within an economy. Central banks monitor and manage the money supply to control inflation and economic stability. Various measures of the money supply exist, each encompassing different types of assets. Central banks employ monetary policy tools to influence the money supply. They can adjust interest rates, buy or sell government securities, and set reserve requirements. By increasing or decreasing the money supply, central banks aim to stimulate or restrain economic activity. During a recession, a central bank might lower interest rates to encourage borrowing and spending. Excessive money creation can lead to inflation. An inadequate money supply can stifle economic growth and lead to deflation. Central banks strive to maintain a balance for stable prices and sustainable growth. Net assets provide a comprehensive measure of wealth, encompassing a wider range of assets. Net assets represent the difference between a nation's total assets and its total liabilities. Assets include tangible assets like land and buildings, as well as financial assets like stocks and bonds. Liabilities represent a nation's obligations, such as government and corporate debt. A positive net asset position indicates a strong financial foundation. Changes in net assets can signal shifts in a nation's economic structure. Challenges remain in accurately valuing intangible assets like human capital and intellectual property. Nonetheless, net assets are valuable for assessing a nation's overall wealth and future prosperity. Measuring global wealth presents greater challenges than measuring national wealth. The scale and complexity of the global economy make it difficult to arrive at a precise figure. Efforts to estimate global wealth involve aggregating data from various sources. Despite difficulties, understanding global wealth distribution is crucial for addressing economic inequalities. The concepts of money and wealth are constantly evolving with technological advancements. The digital revolution has impacted the way we perceive and measure wealth. Digital currencies and online payment platforms have created new challenges and opportunities. Artificial intelligence and blockchain technology have the potential to transform the financial industry. These advancements necessitate further refinements in measuring global wealth. By embracing new technologies, we can develop more accurate measures of wealth. The quest to unveil the true extent of global wealth remains ongoing and complex. From cash to cryptocurrencies, the forms of wealth are diverse. Metrics like GDP and net assets provide insights but represent pieces of a larger puzzle. Embracing the multifaceted nature of wealth can help create a more equitable and prosperous future.